as all of your peers were negative, were you just defiant? Is that how you would describe yourself as a...
Absolutely.
What's the name of the firm?
Defiance.
Defiance.
Defiance is the name of the firm.
You've seen her ringing the NASDAQ opening bell and sharing insights on CNBC. Sylvia Jablonski is the CEO of Defiance ETFs, a leader in innovative investment strategies. She's passionate about helping retail investors navigate the markets. And today, I had the chance to sit down with her for an exclusive conversation you won't want to miss. I guess my first question would be, where do you believe we are in the quantum computing timeline? Are we in the internet in the 1990s phase, or maybe a little earlier?
And I think it's almost like AI pre the ChatGPT moment, right? The biggest thing to come in the next fourth industrial revolution of technology.
What breakthroughs or milestones do you think will serve as major catalyst for, I guess, broader investment and adoption in quantum computing?
Again, like they're already commercial, they're already starting to generate revenues. And so it's already here.
How should investors think about the quantum race between like the US and China?
The US government is starting to invest, billions into this space. We wanted to have a fund that gave investors access to the top names in these spaces. And
QTUM is kind of the only one of its kind out there. Okay, well, welcome everybody. I'm Kyle with Fundamentals of Finance, and today we have Sylvia Jablonski from Defiance ETFs with us. She is the co-founder, CEO, and CIO. Welcome, Sylvia.
Thanks for having me, Kyle. Happy to be here.
Yeah, I was really excited when you guys reached out to us, and frankly, this is the first kind of interview style video that we've done on the channel, so we're happy to have you.
Cool. Cool.
Yeah, so everyone that's watching, my vision for this call is to start maybe with a little bit of Sylvia's background, talk about being a CEO of an ETF company, and then later on talk about macro opportunity with quantum computing, and then dive into their fund that they have that specifically looks to take advantage of the quantum computing opportunity. If you want to look that up right now, the ticker is QTUM, but we'll get to that here in a little bit. So Sylvia, I looked at your LinkedIn and stuff. So it looks like, what's it like? I guess one question I just have is, what was it like starting an ETF company? I mean, was there a lot of red tape? And I mean, is there continue to be red tape? And, I know you worked at some of the big names before that, but I'm just curious, what was it like in 2018? Yeah.
Yeah. So actually, I'll give full credit because it's really our chairman that started the ETF company in 2018. But he, Matt Belsky is our chairman, myself, and our team, David, Jacob, and Gabby. I mean, we all had a background in kind of the specialties that we're working in, right? So Matt and I in particular spent a decade in ETFs before we did this. So it's not, it's like anything else really, right? I mean, there's the aspect of fundraising. So you have to have capital in order to launch ETFs. They're costly and they're expensive to run. You need all sorts of things to run them and people to support you. So, you can make a decision as to whether or not to start the company with like doing everything in-house. And then you would spend on hiring people, like whether it's compliance, legal, trading, all the different moving parts, or you could outsource some of it. So it's making a lot of those decisions, but it's not really red tape. It's just kind of like needing the building blocks in place. And the biggest building block is having a good idea. I would like to think, having some level of talent and knowledge about ETFs themselves and what you're doing. And, the second thing is really just having the capital to build out the infrastructure, because it is intensive, right? It's capital intensive. And, red tape is kind of part of any industry, I would say. But for ETFs, like the rules are the rules. We know what they are. And it's just a matter of getting the right team to, support you to follow them.
Yeah, and I'm curious, everyone knows Shark Tank and stuff. I mean, were you doing any sort of presentations like that, trying to raise money and along with the chairman, or?
Yeah, I mean, we're doing that every single day. So it's 2025 and every single day, we're not on Shark Tank, but every single day we're pitching someone and we're talking about, our company, we're talking about our ETFs, we're talking about our new ideas. I think you're always pitching in this business, right? And that pitching, at first is to raise money for the company, and that pitching then morphs into who we are as a company, who we could be, what we're doing, what the products are. And I think that in my mind, like one of the keys to success in this industry is you have to just constantly be talking to everyone about everything you're doing and making connections, networking, and all that kind of thing goes such a long way.
Yeah. And on that note, I'm really curious as well. I mean, for everyone watching, I saw Sylvia I think she was on CNBC just last week, maybe about 10 days ago. And Defiance, a VP from Defiance reached out to us, for everyone watching. So I'm curious, Sylvia, you're on CNBC like 10 days ago. Now you're on, our channel with almost 20,000 subscribers. So what is it? I mean, you have a million things you could be doing. So what made you want to, talk to us, just the small 20,000 subscriber channel? Yeah. I'm curious to hear.
Yeah, because I think that you guys are actually our clients, right? CNBC reaches, to your point, CNBC's it's a global network. It reaches the world, it reaches institutions, but Defiance was always kind of built on the young investor, kind of the future of investing, the person who cares more about AI and machine learning than they do about the old classic tech funds that were out in the market. Like, nothing bad about those funds, right? But that we just kind of thought that it was that next gen trader. And what we've found is, like, people like yourself, like, you're actually talking to the people who have who are looking at products like ours, who care about products like ours, and also have really strong opinions for better or worse. I mean, we've been praised and slammed and everything in between, but we just get so much great feedback, so many ideas from the actual end retail person that you're talking to and who could be listening to this.
Yeah, that's great to hear that, because when we started the channel, we wanted to reach out to the average Joe investor, if you will, or people that didn't work on Wall Street or don't have Wall Street connections, right? So,
and they're running the market. Like, we could tell we could tell ourselves whatever we want, but the retail investor, I mean, it's so evident, right? If you just look at the last 2 years, what happens in the market, and if you kind of connect it to what's being talked about on X, on YouTube, on all the different podcasts, people such as yourself, the conversations you're having, this is what's moving the market. So I think it's as important as CNBC. I mean, all of it's important.
Yeah. Well, that's great to hear. Another question I had about being a CEO, do you find that what's the most important thing you do every day? Is it inspiring and the vision, of inspiring the people you work with, or is it technical acumen, or just a combination of everything?
It's a combination of everything. When you have a startup business that begins to grow up and mature, which we're very much on that path too. I mean, we've had hyperbolic growth over the last couple of years. It's all hands on deck, and everyone does a little bit of everything. So I think the things that you do change a lot. Like, in the beginning, it was a lot about, getting the brand out there, getting people to look at us. It was a lot of the media was highly critical and just kind of getting a spot on the map for everyone to, know who we are and things like this. But as you grow, it changes, right? It's a lot of product development. It's making sure that we're putting the right products into the market, making sure that the products we have are the most efficient, and that they continue to, evolve, and things like this. And, actually, it's been from shows like this where we've gotten feedback from clients like, hey, I would rather you give me this dividend on this day. I would prefer this. We've definitely taken a lot of advice from, or at least considered advice and feedback that we get from people on things. But yeah, it's a long answer, but really it's a little bit of everything. When you have a small company, it's all hands on deck, and all of us have our hand in everything. The biggest thing is, though, product growth. It's keeping the lights on, actually executing on all of what we do. And also compliance is a huge thing in our world. Yeah, so we're all, the bigger you get, the more careful you become. Yeah.
And can you share some some stats about the company, right? About 3 billion AUM employee. Is that right? Or
yeah, so we've actually grown quite a lot. We're at 5.5 billion in AUM, and which is great. I mean, most of that growth has come over the last couple of years only. So that's been a great surprise for us, and something obviously that we're working towards quadrupling and beyond, right? We're a team of 5 on the main ETF side of the business. We also have a marketing company, Defiance Analytics, where we do all of our marketing, and digital reach and things like this. And there's another team behind us there that really supports marketing. And then, we have access to trusts and trading partnerships and things like this. So there's just, hundreds of talented people behind us as well.
Okay. And last question before we get into the, I guess, quantum computing macro outlook. Second half of 2025 or maybe the next, year, 5 years, what are some of the, your goals at Defiance ETFs? Is it 10 billion by the end of the year, by next year, or what does that look like for you?
I mean, for us, we definitely have we have a lot of pressure on ourselves to deliver. So, we're certainly, our next milestone will be 10 billion, but once you get there, you're going for 20 billion right after that. So,
absolutely.
To the moon.
Okay. All right. So yeah, I have some questions here about the macro outlook for quantum computing. And again, everyone, if you didn't hear earlier, QTUM is Defiance's quantum computing fund. And so we're going to dive into that in a little bit, but I just want to know, and for everyone watching, I'm not a quantum computing expert by any means. So I was kind of excited to have this conversation because I can just ask regular questions. But I guess my first question would be, where do you believe we are in the quantum computing timeline? Are we in the internet in the 1990s phase, or maybe a little earlier?
I think so. I think that's a great analogy. I think quantum computing is very much in its infancy. It's a word. So we launched this ETF in 2018. And when, we were out there talking about it, people would say, what does that even, mean? What is that? And I think it's really taken over the media for sure this year. If you turn on any kind of trading show, the quantum stocks are actually moving the market. They're getting a lot of attention now. And I think it's almost like AI pre the ChatGPT moment, right? Everybody thought it was kind of like too soon. Some people were talking about AI, and all of a sudden Microsoft announces this, investment, and now it's like overnight, every single person on the planet is using the different, whatever it is, Grok or ChatGPT or, kind of whatever chatbot they like or AI bot they like. So I think quantum is still kind of behind that. And I think that it's the next, the biggest thing to come in the next fourth industrial revolution of technology.
Okay. So on that note, what breakthroughs or milestones do you think will serve as major catalyst for, I guess, broader investment and adoption in quantum computing?
I mean, it's a great question. So I think the first thing that kind of propelled interest in quantum computing was when you had these massive companies and CEOs like Jensen Huang from NVIDIA going on and talking about, the power of quantum computing, essentially how quantum computing is necessary and works in tandem with AI and machine learning. Kind of can't have one without the other. And I think just having these, kind of brilliant minds of the world talking about it, right? That was the first thing. But then I think we get hype, right? And then people start trading stocks and buying stocks, and a lot of it is going on hype. And then you actually need a result, right? So I think what's happened in the last year or so is that some of these pure play quantum companies are finally starting to get to a point where, they're a year away from turning a profit, or they have something that's commercialized and has scale. You have companies like D-Wave that are out there that actually have a commercial business in quantum computing. They work with like optimization and supply chains. You have IonQ, which has all of these relationships with Amazon, Google, and things like this. They're competing in building the actual quantum computing space and software, cloud services, and things like this. So commercialization and profitability will be the thing that make, I think, that next level of investment come into these markets and stocks.
So question about that. I heard, I'll just say from a respected source in the industry recently, that there wouldn't be like the earliest, I think you said commercially applicable, application of quantum computing. He said like 5 years. Would you agree with that, or any thoughts on that?
Yeah, so I think the first, it was really interesting because quantum computing stocks were doing quite well, and then they came on, and a lot of the CEOs were saying, no, it's 20, 30 years apart or away. And then the actual CEOs of the quantum computing companies are like, well, no, it's actually here, right? So if you're talking about companies like D-Wave and IonQ, again, like they're already commercial, they're already starting to generate revenues. And so it's already here. But I think that the next the next stage of quantum computing, and as it builds out and scales, that will come for the next decade or so, right? But to some degree, there is already a commercial level of quantum computing.
Okay. Do you think that quantum computing will disrupt certain industries before others? Like, can you put your finger on it and say,
Yeah. I mean, it seems like the feedback that we get from actual companies that are using quantum computing in some level already, healthcare is a huge one, right? Everything from research, because you can run in parallel states, basically. So the research and the amount of data that is out there gets processed much quickly. Two different things, X and Y, can be running at the same time. Quantum computing allows that data to be processed faster than, a classic computer might take like 1,000 years to process what a quantum computer can do in 2 minutes, right? So I think just drug trials, the pharmaceutical sector is just kind of like prime for this. The other thing you can think about is just like risk models at banks, like when banks kind of determine what is their risk exposure, how to make a loan. I think that optimization for supercomputing is just a great asset to that space. And then aerospace and defense is another big one too. Quantum computing has this potential to, kind of better nail down targets, strategy, communication amongst the different aerospace and defense systems, satellites, things like this. So I think it's kind of, it'll change everything, right, to some degree. But the sectors that require loads of data to be processed, which is, I guess, why I'm saying everything, right? But just pure data to be processed, like pharmaceuticals, banks, aerospace and defense, I think would be kind of prime for optimization from quantum computing.
Okay. And let's talk about from a geopolitical standpoint, or just macroeconomics. How should investors think about the quantum race between like the U.S. and China and other nations? Is there any story there? Or?
Yeah, so the U.S. government, I mean, that's part of the macro story, really, is that the U.S. government is starting to invest, billions into this space, right? And there are some companies that are benefactors of that already. IonQ is one of them. D-Wave is another, Rigetti is another, so I think that the U.S. realizes that they can't be behind on this, and there's a lot of investment coming into it. That being said, you're hearing a lot of news around quantum computing coming out of South Korea. You're hearing, a lot of R&D happening in Europe, China, of course. So it's like anything else. It's going to be, kind of a race to the top here, but something as broad as this is important, I think, to stay ahead of. And I think, having those investments from the U.S. government is pretty telling.
Yeah, for sure. Do you actually, on that note, I've lived abroad a little bit in some other countries, but I recently moved back to the U.S. and I just love. I mean, I'm curious on your perspective, but from what I can see, both on the news, but also just my personal experience. I mean, it's so obvious to say, but when I lived abroad, I really saw it that the U.S. really is just this wonderful place where like you can really make an idea into real life, and whether that's a small business or a startup, company or the big dogs, right? I mean, and do you see that too, just as far as a business environment, US versus trying to start a business in any other country, or any thoughts there?
Yeah, I mean, I think like it probably depends on the business, I would imagine too. But if we're talking about specifically like ETFs, I mean,
Yeah.
ETFs are so mature here, right? Like this is in the US, it's, trading is kind of flawless and efficient, and the growth of the space, there's trillions of dollars now in the ETF space. It's growing by the hundreds of billions, almost quarterly now. And so I just think that there's so much opportunity in the US, and it's like a well-oiled engine. And now you're starting to see it trickle down though. Like in Europe, there is this renewed interest now in things like quantum computing and AI and things like this, but the way they kind of trade and invest in ETFs is different than we do it here. And I would say that the thing that we have here is like what you and I were talking about, like why do this with you, right? It's the retail community. They also want opportunities. And so if you have new funds and a new business, you bring something good to the market, like people are receptive to it and they'll give it a shot. But I agree with you overall. It's like there is that as you said, even from a small business, right? Like where else in the world can you kind of tomorrow decide that you want to open a sandwich shop on a main street in a small town? Like I think we've definitely got that going for us.
Definitely. Yeah. And on the international retail investor subject, I would say, yeah, I'm seeing kind of I think from our channel, I would say a lot of our most engaged viewers are people from other countries that, they don't quite have the type of financial advising infrastructure or ETF infrastructure like we do here in the US. And so they're just, really engaged with our content because they're not really getting that in their own country. And also to your point, what I've seen too, that, the platform, a lot of not to talk bad about, this is a broad non-US statement, but a lot of the other platforms out there, they don't have as many options. Like a lot of times we share a fund that we might like onto the channel, and then we get someone, hey, I'm in Australia, we don't have that here. Or,
right, they're prohibitive. Yeah,
exactly. What's a similar ticker to that one? We don't have that ticker on my platform here in Australia, right? So yeah.
I mean, we hear that too. We have a lot of foreign investors, and they, and some of them are able to trade our stuff because they'll have like a US brokerage account or something like this. But yeah, it's a good thing because I think companies like ours could think about ways to become creative and get access to the products that we have in some of those countries. And it's also good for the local ETF companies to think about, like, hey, if they're asking for these products, why don't we just launch, right? Because you have a lot of ETF companies in Australia and places like this. But I agree. There are just like different rules, right? And also there are marketing rules. Like our company can't just kind of go out and market in Europe, right? You have to be registered there and have an office there and all sorts of things too. So I think to your point, like your channel and your information is really good because you can provide that.
Yeah, absolutely. So to everyone watching, I'm going to ask one more question to Sylvia about the macro outlook, and then we'll dive into the fund specific questions. So Sylvia, what would you say to skeptics who believe quantum computing is still too far away to be investable?
Look what happened with NVIDIA.
Great answer. I think that's all we need, really.
Yeah.
You want to, anything else? Or,
I just think everything, rightfully so, people should be skeptical of things, right? Because there have been a lot, like we've had meme stocks, right? And that was a huge thing. And a lot of those names took off and there was kind of no rhyme or reason as to why. But it's good to be skeptical, but I think that, once you start seeing the research and you start seeing the actual application, commercialization, and you believe it in it, I mean, it's something you consider, you can consider doing some research on for your portfolio for a future investment. Great
answer. Okay. Okay. So now we're going to talk about QTUM, Defiance Investments, Quantum Computing Specific ETF. Just to share with all the viewers, I just pulled this up, and the 1 year, 3 year, 5 year returns. So 1 year, 53%, 3 year, 31%, 5 year, 25% annually. And for everyone watching, I looked on Morningstar. If you know how peer rankings work, let me know if you don't know, but this was basically a top decile across 1 year, 3 year, and 5 year timeframes, top decile fund, which basically means it's basically been the best or one of the best US fund technology funds in the last 1 year, 3 year, and 5 year timeframes. Does that all sound about accurate? So yeah, I don't know if you have.
Yeah. No, we're Morningstar 5-star rated fund. And yeah, it's been around since 2018. We have a great track record. And yeah, it's definitely our most popular and biggest fund to date. So
yeah, what is the AUM on it? Do you have a ballpark figure, or I don't know?
Yeah, it's over 1.5 billion in assets, and kind of continuously growing, which is like a good size, especially for a thematic ETF. So
and
liquid and trades a bunch, and
yeah. Do you actually, I just had a random question. Is it like internally, do you have analytics that show like on average how long someone holds each ETF, or is that?
Yeah, we do. We look at all of that. So this ETF is actually not often sold. We have levered and inverse ETF products, and those tend to be 1-day trades, right? Those are short-term tactical trades. But for an ETF like Quantum, I think what we've found is that people believe that this is a long-term story. You know, I mean, I had a call with an advisor this morning who told me that he plans to put it in his portfolio and just leave it there for the next 10 years, right? Because that's what these technologies are. They play out over time, right? And so it's definitely a buy and hold type of play. You know, it's kind of like no matter what's going on in the market, it's, you know, you always have these debates, right? Like when the market pulls back, everybody says, you know, kind of like get out of Mag 7, you know, tech and all this kind of stuff and go into defensives. But actually, you know, those companies also have the strongest balance sheets and their quality. And like, so when they're down, you know, they're not really about a place to hang out. But I think innovation is a different thing, right? There's no time. There's no like bad time or good time to get in when you're at this level. This is kind of like phase 1 of quantum computing. It's still a lot of R&D. I think that, you know, it's just like a really great opportunity to consider for investors.
Yeah. So I have 2 questions. One, I guess I'll go with the one that's related to what you just said. And this might be a redundant question, so just let me know. But, you know, to everyone watching, this fund was launched in 2018. So we're talking 7 years ago.
Yeah.
Yeah. And so what was the thesis when it was launched in 2018? And, you know, how has that evolved in today's environment? And again, that might be a redundant question, so just let me know.
Yeah. No, it's a great question. I think when we launched this in 2018, very few people actually knew what quantum meant and what it was. And we just had this vision that AI, machine learning, and quantum computing, basically supercomputing, was going to be, you know, the next major generational, you know, kind of seismic shift in markets and in the sector of technology. It would reshape technology as a whole. And so we wanted to have a fund that gave investors access to the top names in these spaces, in the AI, machine learning, and quantum computing space. And the way we went about it is we thought about, you know, the bigger companies that invest in quantum and have a lot of research and development, like NVIDIA is a stock that's in there, but also the small cap, pure play, you know, quantum only companies that could end up being M&A companies. They could end up being, you know, large caps by their sheer level of success over time. And so that's like the IonQ, Rigetti, D-Wave of the world. And so it's a basket of 70 stocks that kind of mixes the big guys, the large cap ballast, with the small up and comers that are all relevant to the quantum space. But we were just thinking that, yeah, this would be the next gen tech theme.
Okay. And going back to the other question that I had, that's not so much related, but, you know, Morningstar has you guys as, you know, US fund technology category. And do you agree with that category? Or I know, you know, for everyone watching, Morningstar fund categories can be highly debated because a fund shop might have what they think is a global fund, but then for whatever reason, Morningstar says it's US, or that's probably not the best example. But I don't know if you want to share any additional. I guess, do you agree with the US fund technology, or is there another category you think would serve it better?
Yeah, I mean, they don't really have a category for just like machine learning and quantum. Yeah. It's, you know, so I'm okay with it. Like US technology is fine. I think the interesting thing to note though is that it's not really like a classic tech fund like we used to think about, you know, stock selector tech funds and things like this. I mean, it's a pure quantum AI machine learning ETF. And so it probably falls into its own definition, but I don't know that they have one that like directly fits it.
Yeah. And so on that note, if someone said, you know, the retail investor out there, a lot of them, you know, just going off the numbers here, they probably own a lot of, you know, QQQ or VGT. Yeah. So, you know, if they come to you and say, hey, I already have QQQ, I already have VGT. So what role could QTUM play in my portfolio?
Yeah, I mean, this would be a great complement to those positions. So as they're putting new money to use, because you're right, everyone on the planet pretty much owns Mag 7 or Qs or whatever it might be. So I think you already own that, right? So this is a niche part of that same space, and it's just a great complement to your portfolio. So, and that's actually a great question, because it's the way that we often hear advisors use this. Like, I have, you know, 10% of my allocation is tech or whatever it might be. I'm going to put, you know, 4 to 5% of it in quantum and complement my portfolio. So that's often how we hear it used. And for the retail community, it's more of like a decision. It tends to be more of a decision. Like, I want exposure to quantum, whether it's in my strategy, whether it's not. It could be a satellite position. I want this ETF. So it goes either way usually.
Okay. And another question that I had was about I guess I'll ask you the question and then maybe explain it to the viewers if needed. But so to everyone watching, well, this fund, it tracks the Blue Star Quantum Computing and Machine Learning Index.
Yes.
Right. And so Blue Star. So my first question is, Blue Star is I guess it's a boutique index.
Yeah. So yeah, Blue Star is now Market Vectors. They had a merger, but yes, it's the name of our index provider. So S&P 500, for example, is an index provider. NASDAQ provides indices, and Solactive, and so this is one of the big kind of well-known index providers out there. So the ETF is passive. So we work together with our index provider. They come up with a methodology. We stick to the methodology, essentially. So basically the stocks that are picked fit the formula of the methodology, and they're rebalanced twice a year. And the index provider is the one who ensures that methodology is kind of up to date, that we have the right basket, and things like this. So they're really like a lot of any kind of ETF that's basically considered passive has an index provider usually, and you track this methodology that you've come up with them.
Yeah. Thanks for explaining that. And me as a former industry professional, my question is, so to everyone watching, whenever in the investing industry and Wall Street industry, if there's a product that's working really well, all the fund shops or all the banks, whatever, will normally if something's working well on a Monday, by Tuesday, all the other banks will have it, all the other fund shops will have it, because it's working and there's a demand for it in the market. And so I'm really surprised and for everyone watching, the VP of Defiance told me that QTUM is kind of the only one of its kind out there. And so Sylvia, one, is that true? And two, why hasn't anyone else, copied this fund? We all know quantum computing is a big opportunity, and so I'm curious to hear your thoughts on that. Or was there copyright? Or I don't know.
They're coming now. They're coming out. There's some filings out there. So I think it's one of those things, like we took a chance because we really believed in this theme, and we had it out there. Like, to your point, we've had it for 7 years before anybody thought that we were on to something, and now we are. And now, you're kind of seeing the competitors come out of the woodwork slowly here. So, but for right now, we do have that position of being the only, quantum ETF in the space. It's to your point before. I mean, I think people are skeptical of things, or just don't think we're far enough on a particular theme and things like this. And we really took a chance with this and just thought that this was going to be the next generation of technology. And it's a risk that certainly paid off. And not only that, it's performance, right? Like you said, I mean, we have the 5-star rating, we have the track record, the performance of this ETF. Although future performance isn't indicative of the past, it's done its job, right? And I think people now kind of accept it as the go-to quantum ETF.
Yeah, and can you tell us more about the index? Is it equal weighted, market cap weighted, or something else?
Yeah, so basically we look at all of the stocks that have 150 million market cap or more, and they have an average daily trading volume of $1 million USD. We look at all of the securities that are in the quantum computing space, and it's equal weighted, but then it kind of like runs up intra year. So there are 2 rebalances throughout the year, and during the year your winners are running, and then it's reset every 6 months or so.
Okay. So, and from what I understand, QTUM, it blends quantum computing and machine learning exposure.
Yeah.
So can you walk us through that dual focus and how you see those technologies complementing each other, or do you think it might split in the future and go? Yeah, I'll just stop there. So.
Yeah, no, I mean, I just think that we think that like one is important to the other. Quantum computing essentially can help train AI models, and that's kind of the give and take there. And then kind of the other way around too. You have all that AI can do, and the data that you need for quantum computing, and AI can kind of parse that data and make it more usable for quantum computing and things like this. And I think it's just like one hand kind of feeds the other. I think they're the 2 biggest transformational technologies, right? And if you want to have continued machine learning and robotics and driverless cars, it's all going to be about like speed, efficiency, data, right? Processing data, doing it quickly enough, and doing it more efficiently enough. And so right now in its infancy, quantum computers, like the big challenge is error, right? It's you want error reduction. So yes, they're doing these things, these like zero, this 0 and 1 state simultaneously running parallel multi-level transactions, but there are errors, right? And so then AI and machine learning can kind of like help reduce that. But then quantum computers, once they have the good data, could train the AI models too. So I think that there are various uses for this.
Got it. Okay. I was going to ask you about maybe other funds on the horizon from Defiance and things like that. But also before I ask you that, if there's anything else you want to share about this particular fund that you think we should know, or
yeah, I think the argument that I would make for this fund is whenever you have like a new innovation, right? It's hard to pick stocks because you have, there's a handful of just pure quantum computing companies out there. Most of them aren't profitable yet. Most of them are in the R&D stage. And I think when you have an ETF, it's kind of the sweet spot because you get exposure to all of them, and then you'll have exposure to the winner when it's running, but you also have the ballast of the other companies that are combined in there when there's a pullback in the market. And so you lower your risk, but you do participate in that upside. So I think when you have something new, ETFs are a great tool to get that diversification versus just trying to pick the right one and knowing what it is. Yeah. And then on what's on the horizon, today we just launched an AI power ETF. So all of the stuff that we're talking about needs to somehow be powered, right? So that's something that it's AIPO. APO is basically, the AI power ETF. And the premise there is that, you're going to have these companies like Oklo and Vistra, and, they essentially need to help power all of this: machine learning, the data processing, the quantum computers, blockchain, Bitcoin mining, and all of these things. And we just thought that actually wasn't in the market yet. And it's the same type of thing. So people are kind of stock picking, which is it going to be nuclear? Like, which is the company that's going to move the dial on this? And so we thought, why not take them all, put them in an ETF? And that'll, like, if AI and machine learning and quantum grow, AI power should also evolve.
Got it. Okay. I did have another question about QTUM. This one, I'm just going to read it. It's from one of our most engaged viewers, and
Okay.
I think he mentioned and I'm just going to read it. But I think he has a little bit of a physics background, so I'm just going to read it and see if you.
We should invite him on to talk.
Yeah. Right. Yeah. Okay. So this is what he said. He said, to ask Sylvia, he said, curious about the new inflows into the single stock leveraged ETF space.
Wow.
Particularly for quantum companies that are considered high quality, like IBM and Microsoft, maybe IonQ. He says, I'm a physics enthusiast with a useless bachelor's in it, but I really don't get D-wave or real use cases for annealing in general. So that's my negative bias. On it, excluding them. But curious which upcoming ones she's most excited about.
Yeah, so we actually launched, we have single name levered ETFs, and we include them we include some of the quantum names there. So IonQ is one that investors seem to really gravitate towards too. But keep in mind, those are 2 times leverage. They carry certain risk. They're certainly for active day traders, right? And they're not meant to be bought and held in portfolios. Quantum is a buy and hold. There's no leverage in that ETF. IonQ times 2x, you get the 2x, you get the enhanced, return when it's up, but you also get it on the way down. And so that's just important to note. But yeah, I mean, I think we've seen a very high level of interest there in particular on IonQ. And then the quantum names that also do other things, like, and we were talking about NVIDIA, I think, for everyone, that feels like an obvious one, I guess, but there's so much interest in that stock. And then even like IBM, like some of these companies that we haven't talked about in a really long time are now actually, like Oracle and IBM. I mean, they're actually transforming the way they do business and trying to participate in this. And so they've gotten a really interesting, tailwind from the IonQ theme.
Got it. That was a great answer. I know he's really going to appreciate that. He always asks really insightful questions. So thank you for that.
I know. I mean, if your viewers have any questions or comments, we always like to hear them. And, we actually mean it. As I said, we really take this information to heart and discuss it, and means a lot to us because I think our business is really built on the retail community. And so, we really appreciate doing this stuff and having the chance to talk with you all about our products and things like this. So thank you.
Yeah, thank you so much. And yeah, I'll speak on behalf of the viewers is that, yeah, that we all know the Wall Street stereotypes, and Wall Street doesn't care about the Main Street investor and things like that. So it really is great seeing a CEO, getting on our channel, answering questions. And yeah, we really appreciate it. So thank you for joining.
Thank you. Thanks for having me.
All right.